Now let's try to understand the double entry system. Before that, let's try to understand how a normal business transaction looks like. But let's go into times when there is no money, when there was a barter system. In barter system, what used to happen is people used to exchange goods for goods. Now in this case, I'm a manufacturer of wine, and my friend is into stitching of clothes. So what I do, if I want to get a cloth, I have to go to him and give him my wine. So this is the way exchange system used to work. But once money is invented, so for wine I am getting money. So this is the way business transaction happens. For any transaction, you'll get a consideration in the form of money, or it can happen a barter transaction also, where you can exchange goods also. But it in current years, it's a very rare circumstance where a barter transaction happens. That's why for all the transactions that we do, either we will be having two legs. One is we will be getting a new asset and having a corresponding liability, or we will be getting an asset and giving up a right over the asset for which we are controlling. That's why double entry system works in such a way that all the assets that I own is equal to the liabilities that I have to pay out plus the equity that I have contributed into the system. So far, I have been telling that total assets of the company is equal to total liabilities plus equity. In order to prove that, I have downloaded the Coca-Cola company's annual report, so which you can download from Google by searching Form 10K with the name Coca-Cola company. You can download any company like say Walmart, uh, Alphabet, Apple, Amazon, anything you can download, whichever you want. So I'm straight going into the place where financial statements are present in this form 10K, which is page number 68. It starts with the profit and loss account, in which he has given the revenue, cost of goods sold, general profit, other expenses, other income, interest expense. Finally, he has given profit before tax, taxes, net profit after taxes. This is the way income statement will be looking. Then he has given statement of uh, balance sheet statement, in which he has given current assets, which is assets which are realizable in the next 1 year. Then he has given total of the current assets. Then he has given non-current assets like fixed assets, property, plant and equipment, deferred income tax assets, investments in equity, other investments, goodwill, everything he has given. Total assets that owned by Coca-Cola company is 86,381 million dollars, while he has given in liability and equity below the assets, where current liabilities he has given as various current liabilities like account payable, loans and notes payable, current maturities of long-term debts, accrued income tax. Total current liabilities amount to 26,973. Then he has given non-current liabilities with respect to long-term debt, other liability, deferred income tax liabilities. Then he has given the equity plus profit he has accumulated during the year and reinvested earnings. So total he is getting 18,981 as equity attributable to shareholders. And total equity including non-controlling interest is non-controlling interest represents interest of other joint venture partners in the group. So total equity is saying is 21,098 including investment of joint venture partners. So total liabilities and equity is 86,381 million dollars for 2019. So that means total assets and total liabilities is matching. So whatever I am saying is practically correct.